So the Federal Reserve met, and it looks like they're on the borderline as to what to do. I guess we'll just have to wait and see. Hey guys, it's your favorite mortgage guy, Steve here. Guess what today is? Today's Friday. It is December the 5th. Can you believe it's December already? Okay. 20 days to Christmas, 26 days to the end of the year, and then it'll be 2026. So listen, get excited. The holidays are here. I mean, it's so exciting. Not looking out my window right now where it's raining, and some of you have snow. But it's still going to be exciting. You know, I will tell you this: every year I go skiing with my kids. For the past 10 years, I've always left Christmas morning, or maybe the day after Christmas, sometimes the day before, and then we end up coming back New Year's Eve. But we're not going this year, so I'm going to miss it. And I'm like lost right now, trying to figure out, okay, what do I do? Do I just go someplace else, or should I just stay home and enjoy it? And that is undecided right now. So listen, thanks a lot for watching. Let me just answer your questions this week. Hey, you had some great questions this week. Most of them were revolved around, is it time to refinance? Yes. Let's go ahead and get you into the pipeline. I'll talk more about rates in just 1 second. But guys, it's very critical that you understand something here. You know, rates are driven by credit scores, loan to value, property type, etc. We call it LLPAs, loan level price adjusters. Right now, I'm dealing with people who out and bought a car. They charged up a bunch of credit cards. They bought things like a Peloton and some of this other stuff on buy now, pay later. Their credit scores dropped significantly. So they're not getting the best rates, but they're still saving a couple of $1,000s a month. Guys, don't put yourself in that position. If you're having a tough time of it, just give me a call. Ignore all these calls you're getting from these predatory lenders that are calling you on your cell phone. I'm telling you, look at the closing costs and look at the closing costs I'm charging. They're significantly higher. I deal with this every week. Listen, I get the same calls you get from these predatory lenders telling me how much they're going to save me, and they don't know that I'm in the mortgage business. So is it time to refinance? Let's get you into the pipeline right now. Let's jump in. Let's save you some money, and let's get you going because all the appraisers are behind, etc. Are there any investor loans out there? That's a great question. That's the first time this came up. So guys, let me answer it by saying this. If you stayed up last night late watching an infomercial that said, use other people's money, you don't need this, you can go in and do that. First of all, you need to find out when that video was taped, because more than likely it was taped anywhere from 5 to 10 years ago. Because one, there are no properties out there. The investors who have cash are gobbling them up either at the foreclosure sale or they're getting to the seller before they lose the house. The real question this person was asking me was, are there any zero down investor loans? What do you think? I mean, seriously, if it were that easy, wouldn't everybody be doing it? Of course not. Now, this person was specifically talking about for flipping properties. They were not talking about buying an investment property like a rental property or a second home on a lake or at the ocean or something like that, where that's going to help make money. They were talking about buying properties and flipping them because maybe they saw something on social media or something like that. You're not going to win that game unless you've got the cash to go buy the property, but you're competing when you do that. And there's no properties available. So listen, hope you guys had a great Thanksgiving and an even better Black Friday, because the stats came out and Black Friday was phenomenal this year. So let's talk about what's going on with mortgage rates. There's some chatter out there that we might be right on the borderline cusp of another Federal Reserve rate cut. Now, what does this mean? Okay. So historically, a rate cut often leads to lower mortgage rates, but it's not an automatic. Mortgage rates just don't automatically respond to more short-term noise than they do the long-term bond yields. So looking at the 10-year Treasury right now, it's been bouncing between 4.9, 4.11. A couple of weeks ago, it was at 4.31. So are the short-term bonds coming down? Yes. Now that said, lower rates would make homes more affordable. They'd reduce monthly payments. They'd give many buyers and refinance seekers a little more breathing room. However, keep in mind supply and demand. So with little supply and the demand, you see prices going up, even though you're seeing rates come down. So that's why I keep telling you, buy the house, not the rate. Buy the house, not the rate. Those people that bought in 2022 and 2023 when rates were close to 8, and then October of 23 they hit 8.6. People still bought houses, and they've got $50,000-$60,000 in equity, and now they're going to save 2 or 2.5% on their refinance. So guys, what's happening right now? As of this week, the 30-year fixed rate mortgage in the United States, it's averaging means nationwide, averaging 6.375. Now, right now, that compares with the past 2022 mortgage rates, right? So while a Fed cut could help, you've got inflation, you got bond yields, and you've got the overall economic sentiment that's going to play a major role in whether rates drop significantly. Now, that's from Morgan Stanley, right? So, but what they also said was the 5-year outlook is great. Now, here's the bottom line. Yes, a Fed rate cut could help, but don't expect mortgage rates to plunge overnight. The reason I say that is it takes time. We might see a drop, and we may not see a rate change, or we might see a drop and it could go up. You just don't know. But lower rates may come gradually, and the degree of the drop depends on many factors beyond just the Fed's action. Okay, so listen, what's to watch this weekend? Okay, next week they're talking about the Fed speaking. Okay, I don't know what they're going to do. I wish I knew what they were going to do. I know there's some noise out there that the president's already made a decision of who his next Fed chief is going to be. Who cares, right? Because that's not going to take effect until May. But right now, the markets are pricing in a good chance of a December rate cut. If the cut happens and if bond yields respond favorably, we could see rates drop further early in 2026. Now, I'm going to tell you, Reuters, Schwab, and some of the others, they're all banking on that. On the flip side, if inflation remains sticky, which, keep in mind, inflation, that's what you're paying for cost of goods, right? So the big buzzword right now is egg prices are coming down. All right. Well, I get it. Egg prices are down $1 a dozen in the past 6 months. Okay. But beef costs are up $2 a pound. So, and chicken costs are up about 89 cents a pound. And gas prices and egg prices are pretty cheap. But that's not the only piece of inflation. There's some other things like the cost of other goods, like when you go to Home Depot. And I mean, look at Christmas decorations this year. You used to be able to get lights for $3.99. They're $7.99. So on that flip side, economic uncertainty still persists. Mortgage rates may remain stubbornly higher, but there's nothing wrong with the rates where they are right now. So those of you who are sitting in there complaining and bitching and moaning about, well, I got a 2.75%. Nobody cares but you about that rate. You've only had the rate a couple of years. That was pandemically driven. So 2 point, 3 point, 4 point, 5 point, nobody cares. You got a ton of equity. Now it's time for you to refinance, get your equity out of the house, or sell the house and take all that equity and buy the next house. So if you're still thinking about refinancing, what are you waiting for? If you're on the fence, now's the time to take action. Now, locking in mortgage rates now gives you the certainty before rates can possibly move a little higher or competition comes in if you're looking to buy a house, especially if you've been sitting waiting for that perfect rate. Who the hell knows what the perfect rate is, because I don't even know what the perfect rate is, but the water is just fine for you to jump in right now. Back to that 5-year outlook, it appears to be steady with rising home prices and steady rates. It sounds like a weather report. I get it. But what you need to know is, guys, I'm here. I'm going to feed you information every week. You need to tell your friends, your family, your coworkers. Don't forget, I do reverse mortgages. If you've got aging parents with limited income, we can help them create income with the equity in their house. We can pay off a mortgage they might have and give them a reverse mortgage, which means they won't have any payments. And no, you're not going to lose the house when they pass away or whatever. So listen, all my contact information down here, over here, up the sides, all around. Call me, text me, whatever you need. You know what? Your favorite mortgage guy, Steve, I'm going to be here for you. Have a phenomenal weekend, and bye now.